whether it will have sustainability, how to understand the trends towards that. And the institutional investors in particular, not the retail investors like you and me or the individual investors, but the institutional investors in particular have a long-term horizon since they hold and show interest in a company's sustainability for a longer time frame. Many institutional investors are therefore considering their ownership rights from a broader perspective, though there are lots of challenges in formulating such a view, what sort of investments I am making, how I can go about, etc. Now, you may know that there are agencies which are signing up for what is called the responsible investments, UNPRI, United Nations Responsible Investments. So once you are signing up to institutions or signing up financial institutions, sign up to this, the UNPRI principles, you have got access to a lot of funds for funding, refunding, but that financial management is possible only if you are able to pick and choose investable projects which are sustainable, not based on 1 year's audited or assessed balance sheet, but based on a long-term value creation. And hence, this particular body, I am coming to the third segment of my presentation, started looking at investor approaches, how they have started looking sustainable projects. Some of the very interesting investor approaches which have been articulated in this wonderful PAB document, there are certain industries where the investors straight away ban it. We don't want to even look at it. They may say so many things, but we don't want to look at it. It's a negative list or a blacklist. One such case is alcohol. Alcohol would never come under the UNPRI. The second way of looking at the investor is the positive ESG screening, how the investors look at from a positive angle by putting it in a bracket of best-in-class investment, where they look into the lot of positive issues of the investable universe and do not try to have a negative approach. These are all the positive trends available. They are promising so many things. They are demonstrating their commitment to the literally to the sustainable development, and hence they are eligible under a positive ESG screening approach. If I were an institution adopting this UNPRI, for example, if you take the case of that morning excellent presentation of Mr. Niranjan Khatri, despite so many legacies for that particular company, today they are so much committed to the path of sustainable development. So whatever possible, perhaps the negative effects of the past, they are all reversing through the so many other issues of social forestry like schools, participation, waste land development, or they are rated in all the 4 factors, including the 4th water positive balance. So there are cases where by using a positive approach, you can look at companies which are best in class and are really sustainable over long term. So when the investors look at this sort of companies, they need to look at different set of performance indicators and need not be constrained by a negative approach. The investors who are looking at sustainable opportunities also take an engagement route. Engagement here means a little bit more involvement with the companies. That also results in a dialogue between a shareholder and a company with the aim of improving the company's value through very great incorporation of ESG factors. In fact, very recently I went through the website of the International Finance Corporation, where they have cited 2 companies, one in Pakistan and another one in India, in Coimbatore, where through a positive engagement, how this IFC is improving the governance levels and the commitment to the ESG factors by these 2 companies, quoting classic steps, how the positive engagement is taking place. These 2 outstanding examples, you may refer to even the IFC website. I am not able to quickly remember the name of the both companies. I will be able to recall maybe in the afternoon. But these are the classic examples of how bodies like IFC are positively engaging the investable projects, telling them to take certain steps as powerful institutional investors, and asking for management systems, management accounting systems, which should be embedded in such companies to prove to the investor that they are on the path of sustainable growth or sustainable development. So here, an investor is a little bit more engaged. He is not only looking at negative list, positive list, but he gets into a little bit more positive factors. And last model of investor approach is an ESG integration involving lot of specific integration of ESG indicators as criteria into the valuation of a company. So this is more intensely involved with the valuation models of the investors. So presently, these are all the 4 documented investor approaches which the IFAC-PAB team has surveyed and got the information. Now, considering this, the last part of my third segment, what are all then the challenges to the mainstreaming of ESG? This word mainstreaming is very often fondly referred to by Aditi. And many of her, she is also, GRI is also passionate about this subject. GRI reporting is not about reporting, it is sustainability embedding into the strategy of a company. This we need to constantly remember. Otherwise, we will be harping on reporting, not on managing. So managing the organizations sustainably, if that comes into the mindsets of the managements, then the ESG issues will not be on the substreams of reporting, but they will be on the mainstream of managing an enterprise itself. But what are all the challenges in doing so? The ESG issues are very complex and multifaceted. It's very difficult to incorporate those issues. For example, if I am going to invest in a particular project, and that particular project has got so many ecological issues which may manifest 5 years later, 6 years later, something happens in that, there is a risk in the site because of which something happens to my project. How can I factor all those in my project appraisals? In fact, one example, classic example, what I want to say, in addition to what Robert Thomason said in the morning about the various projects of CPA Australia. Since I am also a member of the CPA Australia, I get to know a lot of projects they do on the sustainability front. And incidentally, this is also reported in the IFAC-PAB by the CPA president for the purpose of bringing to the menu of PAB what we can do further. One important project which CPA Australia has almost finalized is, it has done a wonderful survey, it has been released already. It has done a wonderful survey of the Australian practices of listed companies, how they are factoring environment in the capital expenditure proposals. So how is it the environmental, ecological or sustainability factors are incorporated in the capital expenditure proposals? Are the CFOs talking or implementing or factoring how the evaluation is done? There is an excellent document. Now IFAC is thinking of using that as a template and giving to all the member bodies, including accountancy groupings like SAFA, how in their individual countries they can do a survey as to how sustainability is factored into the capital expenditure evaluation. The reason is, the ESG issues are very complex and multifaceted. So when we switch off from one level of maturity to another level of maturity, we need such hand-holding tools and guidelines. But the problem is we don't take interest in reading them because they're uncomfortable. The moment something comes for a regular day-to-day professional, 9-to-5 man going to the office and coming back, the task of reading and updation is very difficult. But in the emerging days, this is very, very critical. A professional accountant who updates himself, who gets the current developments on the fingertips, who is able to practice all the advancing tools in his business, in his practice, in his business as an employee, he will be having the cutting edge of being a differentiator in his organization in supporting the sustainable strategies. Now, this sort of publications are really challenging, and the ESG issues are complex and multifaceted. One document I am just now narrating to you is on account of that exercise. And the biggest problem in the mainstreaming is many of the investors and fund managers are overly focused on short-term financial results. Last quarter, what is that? Next quarter, what is the profitability? Am I going to get a capital appreciation? This is nothing wrong about it, but gradually there has to be a transition from this. So you will find many countries starting the green index. In India, you will find the stock exchange having a green index separately. So those companies who are having green strategies, or they have been certification they have obtained in the GRI based on certain criteria, they are put into the basket of green companies, and the green index is, there is separate BSE, Bombay Stock Exchange green index. So it's a journey, it's an evolving journey. Overnight, this will not take place. If you go back 5 years back to SAFA, sustainability was not in the jargon of SAFA at all. So we have not traveled up to this far now. So it's a long journey. Nothing can be done overnight, and we should not have any images that things will turn overnight. It's a long journey. And bringing about transformation in the investor focus gradually is a very big task in mainstreaming ESG. And because of this situation, the compounding factor is ESG disclosures are lacking from companies. Thanks to the wonderful steps which Malaysian counterpart my friend presented today, it was very absorbing as to how Malaysia has taken several steps. Many countries are taking. In India today, there is a guideline on responsible investments. So Ministry of Corporate Affairs has issued a guideline on how to conduct business responsibly. Now, this guidelines has been made compulsory for the top 100 capitalization Indian companies. It's a must. You can't escape this. So either you comply or say you have not complied, why you are not able to comply or explain mode they have brought in. So gradually, as the ESG disclosures increase, for which we are very eagerly awaiting the outcome of the roadmap created by the Rio Summit, as the legal framework gradually steps in a nudging way, the ESG disclosures content will start increasing, and the journey will be further exponentially will be growing up. And the disclosed ESG information should not be of a poor quality and reliability. It should have very high standards. So this is where I am just trying to point out some of the bodies are offering courses of verifying and assuring a sustainability information. Please note, it is not verifying and assuring financial information. You verify and assure a financial information using the auditing standards of the statements, general purpose financial statements made under the IFRS and IAS. This is a different stream. But a typical accountability set of statements or sustainability set of statements, today, a separate standards have been created, though by a voluntary body, but that is gaining a lot of acceptance. That is called Accountability Assurance Standards, based from UK. So my friend can make a note of, mentally make, or he may be aware of this. Accountability Assurance Standards have got a separate training course. They have got a certification. Today, the sustainability auditors, mostly in Europe, the companies who want an external rating, they insist those who are coming as auditors should not only adopt the ISA 3000 series. That is not enough. It is pure audit standard of non-financial information, but they should have been trained and certified in the accountability assurance standards. If you don't do that, then you cannot certify that sustainability information is reliable. So it is not purely about financial audit or tinkering with the financial information. It is something else. And that differentiation significantly comes from making the financial state information relating to the business strategy. So this link with the business strategy and focusing on strategic information, including strategic financial information, not just simply looking at the incremental growth in the assets, financial assets and liabilities. This differentiation has come through these accountability assurance standards. So earlier countries in the SAARC region catch hold of this link which is coming, accountability assurance standards, based on which you can assess a GRI sustainability report. This sort of developments to improve quality and reliability have started coming. The last part of my segment, the last segment, this IFAC document on the investor information and the role of PAB has just mentioned, it is not an exhaustive list, 39 core ESG KPIs. Even if you look at the GRI indicators, the sustainability reporting indicators, you will find 69, am I right, Aditi? 79 indicators which are come as the annexure. The same way, 39 indicators of ESGs have been mentioned in this particular IFAC PAB committee report, which can be used by the professional accountants in business. And these categories come in these three: environmental, social, governance, etc. Typically, environmental ESG indicators like direct and indirect GHG emissions, or the waste and type of waste, percentage of waste reused in the manufacturing process. If you come to the social, then the accidents, fatalities, and near misses, lost time from accidents. And in the case of governance, board composition, these all have been made as an indicators. When it comes to the conduct, the corruption levels, and total amount of remediation and fines, payments to the governments and total value, these all have been made as a part of these 39 indicators which investors are seeking today about companies to evaluate their commitment to ESG. But what does this mean to the professional accountant? Before that, we'll go to the end of the presentation. So it's very important now, if you even go through the sustainability reporting process, what all it says, an engagement process is very important. You just can't go and report something. An engagement process where the stakeholders have indicated these are all the areas from a materiality angle we will be driving. So selection of the selection of the information by engaging the stakeholders is important. So in the context of the disclosure to investor, since investor is one of the stakeholder, the PAIB working in an organization should be performing a process. This is where the final crystallization comes, what roles we need to play. We need to play a very important role in engaging the investors as accountants inside business to understand the ESG needs. In other words, we should not take a back seat. Oh, this is a sustainability related matter. Our chief manager, CEO on sustainability, or the sustainability officer will be talking to someone else and he will be giving us something based on which we will compile the information. That is not the spirit. We should be a part of the engagement process to the investors in understanding their ESG needs. Incorporate this understood ESG needs into the governance and oversight, because in governance and oversight, which is not relating to some financial reporting and accounting, PABs play a very major role. Incidentally, there is yet another document which identifies 8 drivers of sustainable success where PABs can play a major role. One of that 8 drivers is driving the governance and leadership of organization. So here, the PAB should play a very important role in linking the ESG, where in the governance structure we can bring in, segregate the ESG into non-financial and financial indicators, and link the ESG factors to the financial drivers of performance. And the important point which my friend referred to, I don't want to get into a greater detail, the integrated reporting, which is now emerging on the horizon or already has emerged, is going to be a major driver of all this change. If you have to be a part of the reporting of an organization, you need to now get the fundamentals of the integrated reporting. And here, the relevance depends on the materiality, timeliness, and comparability. And we now need to establish, to support integrated reporting, it is not about financial accounting and financial reporting. Integrated reporting is much, much, much more. It speaks of, other than financial capital, it speaks of intellectual capital, it speaks of environmental capital. So just like IFRS and IAS supports the measurement and validation of the financial capital, there are 5 more forms of capital for which you will need measurement systems and reporting systems. How to measure the intellectual capital formation, how to measure the social capital formation. These remaining 5 forms of capital are now being addressed by this IARC committee, and we as professional accountants need to equip us with more skills. In the next decade, those who are today in the age group of 35 or maximum 40 will find it very exciting, because they will find a big chunk of their core competency is not on the financial accounting alone, but is going to be substantially something else, and this is only one part of that. And using this sort of expanded knowledge, you break down the internal silos coming from an internal reporting, like functions, processes, systems, what data are required in order to mainstream this ESG supporting in an organization. Towards this, the IFAC PAB is doing a lot of work. There are some of the website references which are related for this I have given in this slide. It's also part of the hard copies printed for you. Like global reporting website is something which we must be almost now going through daily. If we are able to measure the hits of the accounting community in the global reporting website and tell Aditi that this is how the hits are increasing, she will be the happiest person that in South Asian region we are able to create a lot of visibility for this. The Project Climate Disclosure Standards Board website, the investorvalue.org framework, in India the National Monetary Guidelines on Social Environment, and IFAC's own website on ifac.org/PAB. These are all some of the resources which can help you in moving towards this framework and build competencies. With these few words, I thank on behalf of IFAC for presenting to you what IFAC PAB is doing significantly, and from IFAC we certainly look forward to more and more interaction. What all we need is a very good engagement process. If that engagement process is lacking, then we lack opportunities of communication. In fact, this event of my participation is going to be reported in IFAC as one of the outreach program of IFAC with the SARC region accountancy grouping. So let us all work towards this and make our regional professional accountants much more competent and more visible and more contributing in the global front. Thank you.
Thank you, Mr. Raman. Looks as if there are no questions from the audience. Is there? Oh, there is. Okay. This question is to Mr. Raman from Mr. Gopalakrishnan. What are the concrete actions taken by IFAC to influence the large firms like World Bank or ADB who fund projects at a national level to incorporate mandatory ESG evaluation in selection and implementation in their funding guidelines?
This is a very good question from my good friend. I am sure he has asked this specifically to prompt me into an answer. First of all, IFAC cannot do anything mandatory. It's a voluntary body and we are a part of the federation. So very clearly we speak on behalf of the accounting community. But what IFAC is doing is it has got a very, very close link with the World Bank and other funding agencies. So now it is liaising with them and offering all these guidelines and documents how we are moving about. And sometimes in some of the task forces where we create all these publications, the World Bank representatives also come in, or the documents exposure drafts are sent to the World Bank concerned relevant departments and their views are taken. In fact, there are very many surprises. In one of the sessions, I think tomorrow, there is one presentation on environmental management accounting. Am I right, Lakshman? Tomorrow there is one topic speaker on environmental management accounting. There is a full-fledged document from United Nations on environmental management accounting and what policy framework every country has to take. So this sort of interaction and intervention and pushing the global agencies only IFAC does. It doesn't intervene into the form of creation of a mandatory setup, but it gives offers best practices and keeps telling them, please bring in as a part of the regulatory measure. Even in this integrated reporting, some of the key positions are held by the IFAC nominees. IFAC representation is there in the International Integrated Reporting Committee, but it's all playing a professional and technical role. And no regulatory or pushing role is created by IFAC. It is more a sounding organization, cautioning them, but the only thing, the difference is its words are heard. It is not just ignored, and replies are, we get replies from the, for example, COSO is a organization for creating a framework of internal control and risk management. So if IFAC takes a stand and tells COSO, which is revising its internal control, Rajkumar is there somewhere. I had also posted this document to him, Rajkumar Adukya. So if we take a stand and tell COSO that this framework needs this modification, they change it, or if they do not change it, they come back with a very strong reply. So by playing a very strong technical role, IFAC is doing its best to bring in the ESG factors in the sustainability assessment.
Next question is also to Mr. Raman from Mr. N. Khatri. The question is, can we get 2 more columns in the balance sheet? Resource drawdown and remarks.
It's a very good suggestion, but Khatri Sahab, precisely what I was trying to make was only on this point. If we see as the impact of all the ESG, we pass entries into the current balance sheet and see it as an increase or decrease in the current financial position, we'll be restricting the vision too much, because we are again looking at only the last year's value creation being impacted by the events which have happened, which is what my friend from Pakistan was also presenting. But if you look at the integrated reporting framework, including even sustainable reporting framework, the time horizon is much more. We go by 5 years, 6 years. If you do something today and its impact is not going to be seen in this year's balance sheet, but the impact is going to come 5 years or 6 years later, GRI and integrated reporting will catch it. Even in the columnar addition of the current balance sheet, we will not be able to see this. One example which I gave about ITC itself in the Brisbane presentation, where I presented your social forestry work done in Andhra. If there is a pest attack in one of the areas, or if there is going to be something relating to that new breed of saplings which you are creating, and its impact is not going to be felt today, the DNA or the DNA of that plant is going to manifest 5 years later, 6 years later, there is a possible risk. It will not get articulated even in the current balance sheets in the columnar way you are telling. Though it is the one step towards that, what you are telling, it can be thought of, but I am sure IARC must be thinking in these directions. But what I am clear is, it is not passing entries in the current bottom line, creating the ESG impacted bottom line by adding 2 columns. That is a very limited, I won't say narrow, it's a very limited view of the expanded vision what we are really going to have.
Since there are no further questions, it looks as if the audience is keen to move on for lunch. You want to say something? Yeah, just in conclusion, I'd like to thank all 3 speakers and congratulate them on their excellent presentations, and also to thank the organizers for inviting me to chair the seminar today.
Thank you, Mr. Balendra. There's a small announcement to be made. Ms. Shehani Gomez, you're kindly requested to meet the CMA reception desk now. Ms. Shehani Gomez. Yes, now I'd like to invite Mr. Rashid Rahman Mir, President of the Institute of Chartered Accountants of Pakistan, to hand over the token of appreciation for our session speakers. Mr. Krishan Balendra. Dato Saeed Amin Al-Jafri. Mr. Naveen A. Hamid. Mr. A.N. Raman. Thank you, Mr. Mayor.